Hello guys, welcome to another video. So today we'll talk about after the major setback of the stock markets. I'm suggesting that after our research, there are a few of the stocks that we really have to invest into our portfolio, so that there's really good chance that our 2018 portfolio will be all ready and set to go. So by the end of this year, hopefully we will have a fruitful year, and then these stocks will be generating some profits and to accumulating to our wealth in our portfolio. So that is how we play the game. So when stock market step backs, we should buy something good to our portfolio. When the stock market is too good, you have to understand the real valuation behind. Is it too high or too low, right? So today we'll look at the Nasdaq majority of the time, because Nasdaq is stumbling and setting back to a level that is ridiculously low. Okay, so there may be some fruitful stock and portfolios that we can make, and we can take advantage out of this setback and adjustment. So first of all, if you are new to the channel, please subscribe to my channel and also like my Facebook page. If you like this video and it's helpful, please give me thumbs up, and the only cost that you will have to pay is the thumbs up and the share button. So if you are interested and if it's helpful, please share this video to your friends. Of course, if you have any questions, you can feel free to ask them in the comment box below, or if you have anything to add into, maybe you're working on this working inside of these companies. Of course, you can leave me comments, right? But those are insider tradings. But yeah, don't leave comments if that's the case. Okay, so here we go. So first of all, if we look at the Nasdaq and even the S&P 500, right, the stock market, the indices adjusting huge time back to the valuation almost to the same level of the last year's summer. Okay, so it is winding back almost 9 months ago. Okay, so imagine in these 9 months, every single week, every single day passed by, and people with knowledge and intelligence keep buying up to the level of almost 7,500 level. It's really a rational. It's take longer. It take really long period for this to go up, right? So it shows that it's rational. And the video I made last week is about the valuation, because with the same valuation, it works fairly at the Nasdaq is 7,500 and the S&P is fairly 2,800. So with this setback, is really cheap. So we have to understand what is cheap. Is not sometimes if the stock market, the prices and the index coming down, that doesn't make the valuation cheap, right? But this is the case when the fair value is at 7,500. It's really cheap. So there are a few stocks that I would recommend. So the first one is Amazon. First of all, you see Amazon, the setback is really not that much, right? So people understand the both fundamental and technical analysis that is not the best stock for you to sell, right? So you can see it is shown in the chart that happened in the past month during the Black Friday and the stock market setback. So and then they have the big data, they have all the developments, and Jeff Bezos is a guy that will put his nose in everywhere that he can make money, right? But of course, his strategy is sort of like playing slim, and he likes to jump into the red ocean, right? But he always success because he has all the data he needs, right? So now, with the earning report came out that I'm pretty satisfied. So now people will move forward to next year. So next year, who will think Amazon will lose money, right? Even though the growth will not be will be also remain the same. If that's the case, at the bottom price, $1,280 is really cheap already. So this is this stock is buying the growth. It's not necessarily cheap in terms of the past, but if this stock is fulfilling our expectation in terms of the growth, the stock price and the valuation is cheap at 1,468. So technically, I will show you when to kick into the market, because fundamentally it's okay, right? But whether or not the timing when we buy this stock is really important, right? So the timing is now. Okay, because the real timing is here in the red channel is shown here, but it is past. Okay, all our portfolios I'm holding around 100 billion Hong Kong dollars assets for now. So we have bought it already. So but right now in case because in fact left you guys another video said I'm saying that Amazon is good stock to buy. I believe it's 2 weeks ago. So now you should buy it now, because just one candlestick, it can challenge and break above the historic high again. So the target is right now unlimited, okay? But fundamentally, we can calculate the growth. It should be around by the end of this year. You will see 1,700 to 1,900 level. So this is a good time to buy. But we don't want any setback right after we buy this stock, right? We'll be scared and afraid, right? So the cut loss, you can still make a cut loss around I would say this level, 1,400 level, because it's around 0.382 ratio of the up wave. So this is the ratio you can set it as a cut loss. But I believe that if you want to hold it for 1 year, let's say we put it in highest, we put it here, 1340. Okay, if you want to make a long-term investment, I suggest use the bottom of this candlestick. Is $1,265.93. Okay, so the second stock is Google. So Google, the game that Google plays is not growth. It's about the monopoly, right? So people saying that, oh, it's not monopoly and stuff. I'm holding this stock. I would say that yes, this is the reason I buy Google, right? Because it's playing monopoly game. So you know that I've talked about this stock 4 times, that the North shoots is past and people are reflecting the future, as long as there's another case coming up, right? But we don't fear of something that is not going to happen, right? We've panicked that, oh, this monopoly, the Eurozone will be charging them and paying, making them pay the penalty, stuff like that. They may, but it's not happening right now, right? Because so we have to understand that. With that being said, and the stock price stumbled from $1,200 to now $1,000, it's exactly time rewind to back to last year May and June, when I was in Canada recording this video saying that you should buy Google, right? In the end, yes, it went to $1,200, but it is now another really cheap time to buy. So if you've been looking at my seeing my channel for 1 year, for long-term investment, yes, you may ignore this down wave, but in fact, this is another level that you should add a little bit more of Google into your portfolio. If you're new to my channel, it's a good time for you to buy it and ignore it. Probably not ignore it, right? But you don't need to speculate and check it every day. I would say you should check it weekly, bi-weekly is okay. By the end of this year, I think these 2 stocks will have a better chance for you to generate new income. See, it rebounded from now 1,000 to now 1,100, right? People know. The market knows, right? So the another stock I say you should buy it now, and the cut loss should be 1,000, right? Because it's only 10% loss. And as long as the first target, you should look at the halfway of the gap, which is around $1,150. But if it break through this gap with a big bullish candlestick and cover and fill the gap here around $1,180, you should keep holding it, or you should put in the rest of the money that you prepare to buy into Google. This is the last chance for you to buy it, because the historic high and even higher will be waiting for us. I would say the fair value for this year with the growth should be 1,300 to 1,500. So this is the thing I'm looking at. The third one is not plain growth, is not really too much undervalued. I would say that is playing the game of stability. So this is the stock I've been holding for 7 years. I love going to Home Depot with my mom and sister, but always we're not buying things, right? Because we don't have much money to furnish my my house and for improvement. But right now, I would say that under the bull market, people will tend to buy a new house, or especially again, the US housing market is still really healthy. If you're not changing or buying another new house, you will probably renovate or improve your house that you're living right now. So now, after the earning report that announced yesterday, So we see that the I would say the earning report is really satisfied my expectation and my portfolio expectation. Again, this is the third stock that I'm actually holding with all my $100 million portfolio. So and what I've been telling people from Malaysia to Hong Kong to Macau to China that I'm always talking about these three stocks. So it's not a difficult game, right? The one thing that is difficult is the market, who is and me and ourselves that play into this market, that we have fear, we have excitement, but we have no reasons, right? This is the one that the reasons that we have to fear. But in terms of the valuation, is calculated. It's not a guessing game. It's not estimate. It's calculated, right? It's pretty much still cheap. And $208 is just fair for 2017. With the growth that is generating around 20 to 30% every year, so it should be hitting around 250 to 260 without a problem if you hold it for 1 year. But of course, the adjustment this big, around 10 to 20%, you should be able to prepare for this fall and still remain holding this company, right? But if this fall was here already, it's unlikely that another fall will hit us right now. Let's say $190 hitting back, going back down to 160 is ridiculously low. Okay, especially, in fact, I've drew many lines that is really using 1 to half year to 1 year for the chart to break above it. It's really hard for it to come back down. So this is the thing I would say you should buy now. I know the candlestick pattern is not as good, but it's not bad. It's not bad. If you for long-term investment, to cut loss, you can still make a cut loss here. Around $175 per share, you can cut loss. But for me, I won't set it here as cut loss. I would probably set the black line or the green line because I've been holding this for a really long time, and also do my clients. If it breaks above $197 per share, you should keep holding it, and that means it's really high chance that it will hit historic high again, which is 207.61. So this is the strategies and three stocks that I really think is a no-brainer. You should buy now for long term. But of course, if don't trust me because I don't completely trust me because myself I know what homework I've done. But you have to do your homework. If you don't understand much, you just trust me, or I looked at, I know what I'm talking about, but still you're not doing your homework, then you should set cut loss at all times. Okay, so and then whenever we set cut loss, we're really tight, but for cut profit we'll kind of reluctant to do that. That is the key. You should play in stock market, invest in the stock market. So hopefully you enjoyed this video. Remember to give me a thumbs up and also share this video to your friends, please, and leave me comments. I will check them later. I'll see you next time. Goodbye.